Hey everyone, I hope you've had a good shortened week this week. My name is Jake with Jake Trades and Invests, where I do a weekly recap of where the markets have moved, as well as where I think price may be headed for some of the commodities as well as the indices. So, with all of that said, we will go ahead and jump into our first chart. Uh, Looking at gold for the week, we've hit an all-time high at 33.71, just below 33.72. Last week we talked about the big push off of the 50 moving average, and then we've headed into all-time highs and kind of paused to end the trading week here. It's possible moving forward that at least in the coming week, we may still continue to pause here, or we could continue to push higher. But as of right now, the momentum is up, and there's no reason for that to change anytime soon. Silver also pushing higher this week. We are back above the 200 moving average, and currently sitting just below the 20 and the 50 moving average to end the shortened week this week. Just like gold, I would think silver will continue to head higher over time. We just had the big pullback a couple of weeks ago, but that has almost more than 50% recovered so far. So there may be a little bit of consolidation here, maybe a slight pullback to build a little more support and momentum before heading higher. But I think overall silver looks good to continue to the upside. Same with platinum. We had fallen all the way back to our 900 support area, even dipped pretty far below it, down to around 878 before rebounding back up towards our moving averages. So much like silver, I think platinum looks good to continue higher over the short to medium term. We just need to have the momentum continue for now. Copper also following suit. We talked about last week how it came down, retested our $4 support zone, retested the resistance zone that had been forming over the last second half of the year last year. It came all the way back, found some support around $4 and bounced back up to the 470 mark this week. We're just now below the 20 and the 50 moving average, but we are above the 200-day moving average. So I think for now, copper will continue to consolidate here in this range or even break back above the 480 resistance zone overhead and continue to head higher as long as the other metals continue as well. For crude oil, we're working our way back up towards the support zone. The other week we broke below it, found some support around the $55 area and had a pretty strong candle back to the upside. And we're kind of slowly working our way up back towards that $66 area. I would think in the coming week we'll probably come up and touch that $66 zone. Right now we're below all of the moving averages, so it's a likely area that will touch that zone and possibly retrace a little bit. If we can get quite a bit of momentum behind it, it's possible we'll break back up through that support zone. But for now, the likely outcome would be it would come back towards this old support zone, now resistance area, before pulling back, possibly retesting this 58 down to $55 range down here. Natural gas still consolidating sideways. I talked about it last week, how we were above the moving average and momentum seems to be slowing around the 320 area, even down to $3. We still have a little bit of a gap that we haven't quite filled yet down here around 307. So I would think in the coming week it's possible we see a little bit more downside just to fill the gap. But that would seem like a logical place to buy natural gas, in my opinion, given that the 200 moving average is right around that area. And the momentum, like I said, seems to be slowing as it's approaching that $3 zone here. So for now, I think I'm going to put a support area through here around $3 up to about 307, 308, somewhere in there, 310. I think price may come down and touch that zone, which would, in my opinion, be a good buy area as long as the momentum doesn't pick up and it falls through. So let's wait and see in the coming week or two how price reacts down in this price point. And if it starts to hold and consolidate, it could be a good buying opportunity. For the S&P 500, more choppiness this week after last week's back and forth whipsawing action. We did come back up and close. We had some candles up towards the 20 moving average and then gap down again. So there's still some gaps overhead to be filled up to 5,600. It's possible in the coming week we'll still consolidate and maybe get another strong impulse higher to close that gap. But right now the markets are kind of all over the place, so it's kind of hard to tell where we might be headed. For the Nasdaq, same thing. We came up and touched the 20 moving average and then gap back down. And then prices just kind of consolidating sideways to end the week. We have filled the gap that we had around 19,200. But now we have another one here at the 18,800 level, so it's possible price may come back up, fill that gap before heading lower. But with this much momentum and swings to the upside and downside, some really large candles, it's kind of hard to tell for now which way momentum is going to go. But right now I would say stay cautious and just kind of wait and see, wait for the price to stabilize for sure, wait for the moving averages to start turning back to the upside before calling a long on these markets. Dow Jones, same story as the other two indices. We've had some selling to end the week this week. We haven't quite filled the last gap up here around 41,730. We did fill one of the shorter gaps here the other week and came back and did like a double test of that before selling off to end the week, again coinciding with the 20 moving average. So for now it looks like the price is headed to the downside, maybe to retest these lows. It's possible we'll consolidate this week before pushing higher to try to fill the other gap. Again, it's not a market I want to be in right now. It's more just sitting on the sidelines and waiting to see how price reacts over the next couple of weeks, maybe even couple of months, and wait for the price to stabilize. The Russell's looking okay. We did hit our longer term support zone down here around 1750, bounced off of that quite nice, and it looks like we finished the week consolidating sideways but with a little bit of buying going on. So again, it's possible going into this next week that we will continue to the upside towards this $2,000 zone that was previously a support area. It's also a psychological level here with the gap that needs to be filled. So it's possible the price will continue to push higher up into that zone before pulling back, maybe doing a double bottom down here around 1750 or 1800. But it could also roll over this week if the other indices continue to fall back down towards our support trend line here. So again, with the indices right now, I think it's just a wait and see how price reacts over the next couple of weeks, wait for all the news to kind of settle down, all the tariff talk to settle down, and see how price shakes out. And we'll finish here with Bitcoin. Bitcoin is still holding up pretty well despite all the other indices and things falling. So we had bounced off of our 200 moving average, and we're currently just barely breaking out of this resistance zone overhead. So it looks like Bitcoin wants to continue higher. If some more buyers can step in and we get some larger green candles to start showing up this week, that would be a really good sign. But we will have to wait and see what Bitcoin's going to do over the next week or two. And that's what I have for this week. I appreciate anyone that tunes in. Please give a like and a subscribe. Also leave a comment if you have an opinion you want to share. And with that, I will see you all again next week. Thanks.